Please subscribe and don't forget to press the bell icon to get notified whenever we upload a new video.
Well, today we are focusing on this company. It's known as Kamdhenu. Remember, times are very, very volatile in the market, so be very, very careful. This is not a recommendation. It's a small 500 crore company that we're talking about. From the recent top, yes, it's seen a bit of a correction. In today's trading session, the volumes are higher than normal. They have their numbers in the next couple of days. So maybe the street is preempting a better set of numbers that are coming out there. But let's tell you what the company does first of all. So let's get some graphics going for you on the screen. They say that they're largest TMT selling brand in India. How can that be when they have a manufacturing capacity of only around 75,000 units? That in fact told us that they are following a franchise model. So close around 75 to 76 franchise units. They manufacture steel and they sell it under the brand Kamdhenu. And in fact, Kamdhenu, this listed company, gets a royalty out there. Besides this, besides manufacturing steel, franchise unit, they also have a smaller segment that's known as the paint division. Now, the franchise business models helps in creating brand leadership, particularly in the steel retail business. So that's what they have mentioned on their website. How does it work? So Kamdhenu is the brand. They're doing all the backward work. They're seeing what customers want. Then, in fact, you have the franchise unit that they get into an agreement with. They, in fact, do the manufacturing, and then Kamdhenu helps them because they have good reach. They have a lot of dealers, a lot of retailers out there. So they help this particular, what is manufactured to reach out into where it's required and where the customer needs it. What are the positives for the franchise? They are anyway manufacturing it. Why do they require Kamdhenu? Because basically, Kamdhenu, they're helping them really sell it under their brand. That's point number one. They're helping them function under higher capacity utilization levels. And also, I understand when you're selling it under their brand, then you're getting close to around maybe 1,000 rupees, 2,000 rupees, or 3,000 rupees, depending on what the negotiations are. You're getting that kind of premium. So that's why some of these franchise units, they don't mind getting into an agreement with Kamdhenu. So these are all the positives really that they have mentioned, and they can function at higher capacity utilization levels as well. This was a little baffling to me. Under the sales, under the name of Kamdhenu, they are selling, the brand sales are nearly around 8,000 crores approximately. But in the listed company, they're registering sales of only around 1,200 crores odd. Why is that? Because there are various, under the brand, you're selling it to around 8,000 crores approximately. That's the sales numbers. But we are focusing on the 1,200 crores and breaking that up for you. One is the trading business. That's the higher portion of the revenues, but that doesn't give you much margins. Then you have the manufacturing. That's basically where all the innovation, where all the product specification takes place. But the most important part is the royalty part. Now, that's only around 5 to around 6% of their total revenues, but that's very, very important. And the paints division is around 15 to around 17%. Scaling up from there is going to be important. To give you an example, if in fact, the TMT bar is being sold for around 40,000 rupees, Kamdhenu will get around 360 rupees. Very, very approximate numbers are there. So that's little less than 1% of the selling cost. What the management is stating is that when they started off, there were only 8 lakh tons that were under their franchise model. That has gradually moved to around 3.2 million. Now they're saying that going ahead, they wanted to go to around 5 million. Let's see whether or not that's possible. Then in fact, what they're saying is that in fact, the royalty income has moved to around 61 crores. How do they come up with that number? Roughly, if you assume 360 rupees per ton, then in fact, last year, the franchise units would have sold around 1.7 million units. And that's how you get the royalty income. And finally, branded sales, it's already at around 8,000 crores. They're looking at that going up to around 12,000 crores. This is a little less important than the previous two, slides that we put up for you. The paint division, small one, 46,000 tons per annum. It's into decorative paints out there. They're doing a revenue of roughly around 200 crores approximately. But encouraging to see operating leverage is playing out there, because now the margins are nearly around 3.5% approximately. So that's fairly important as well. If they can scale it up to 250 crores odd, then the operating leverage really will work out for them. Debt in the books is basically the working capital that they have, around 110 crores approximately in that range. What's the shareholding of the company? It's around 66% approximately. You have a couple of funds in there. You have an influential investor as well, Mr. Mukul Agarwal, who holds roughly around 1% odd. But there are a couple of NBFCs over there. And I didn't like that because you're diluting stake over there. You're issue them some shares at around 100 rupees odd. Two factors you didn't like out there. One is their diluting stake. Second is the promoter holding some part of that is pledged. The key points you need to track: how does this franchise model, develop? How does it go moving ahead? The royalty collections, can it move up from around that 61 crores to around 80 crores, 90 crores odd? And finally, Growth in the paints division, that has to be tracked very, very closely because then the operating leverage will play out and that's where the margins kick in. Not a recommendation, an interesting stock there, selling TMT bars. They have a franchise model as well as a paints division. Back to you.